1971, the US dollar has lost nearly 90% of its purchasing power. But hey, for those of you stacking cash, keep going. Keep keeping it in the bank. It will buy you half of the grocery that you need. And maybe one day, that money will only be able to buy you just a bag of chips. If after what I said, you are still not convinced why you should be keeping a lot of money in the bank, watch this video to the end. Have you been to the store lately? And what do you notice? I normally visit the store and I see people staying longer. And I just decided one of those days I visited to just observe what was going on. And guess what? I think my thoughts were right. Before now, you see people holding onto their phones and scanning a product's ingredients to see what are the benefits, to see the calories. Those were most of the reasons why you see people with their phones scanning. But right now, they're for different reasons. Now, I'm seeing people scanning products or things on the shelf, comparing it with other products, looking for a cheaper rate for them to buy. That was not a norm, but right now, it has become a norm. Another thing I'm seeing is people really going towards coupons. So people are having this online coupons and are looking at products on the shelf and looking at their coupons to see, okay, do I have the coupon for this? That also is happening. The most obvious ones that I'm seeing right now. For those that do not have the time to scan products on the shelf, they just go randomly pick up their products, and when they get to the counter calculates all the items that they've bought, and guess what? The person at the counter says your money is $400, and they're like, oh, really? $400? Okay, you know what? And you take out this, take out this, take out this, take out this. Before you know it, they're just taking half of what was in your cart home. These are serious issues, guys. I know it's funny, but really, that's what's going on. And if you doubt me, go to the store and observe and see what is actually going on. People are staying longer in the store because they're trying to do some mathematical calculations so that they can actually buy what they can afford. The issue is that the dollar is not stretching as far as it used to. But here's the thing. Some of you want to say that this problem started during the pandemic. No, this problem started since 1971. It started about 50 years ago when the US decided to abandon the gold standard. So if you know, I'm going to give you some historical data for me to back up exactly what I'm saying. Let's go back to before 1971. Before 1971, each dollar was backed by a fixed amount of gold, that is $35 an ounce. Literally, it meant that your dollar had weight because it was backed up by gold. But after the heavy spending in the Vietnam War and domestic programs, the US could not maintain enough gold to maintain the dollar circulating in the US. How did that happen? After the US spent a lot of money in the Vietnam War and other domestic programs, they did not have enough gold to cover the dollar circulating worldwide. So something needed to be done. So in August 1971, the then president, which was President Nixon, closed the gold window. From that day forward, the US dollar became a fiat currency, backed by nothing, only government promises. As a result of that, the dollar could float freely against other currencies. Also, the US gained flexibility in the ability to manage recession. And the third result was inflation became a permanent risk. So inflation has started a long time. It didn't just start now. Since 1971 to date, the US has lost between 85 to 90% of its purchasing power. So it means that this $20 bill has lost about 85 to 90% of its purchasing power. Before now, you could literally buy a house for $35,000. But right now, that same house could cost you between $250,000 to $500,000. Yes, that same house. That is why your grocery cart now feels lighter than before. I've been experiencing it, but the last shopping I did 2 days ago was just it. I spent about $400,000, but something I normally would have bought for $200 and something thousand. Despite the fact that the dollar has lost about 85 to 90% of its purchasing power, why do people, or why other countries, or why do you still rely on dollar? Because it's liquid, you can spend at any time. It feels safe because it's backed by the US government. But is that still the case? Is it still safe right now? Do people trust the US government? Recently, today, that's up to you. The FDIC insurance gives people peace of mind that they can trust the bank and save their money in the bank. That is why some people still invest in the US dollar. But here's the catch. Regardless of the fact that people still rely on dollar, that does not change the fact that the dollar in your bank is still losing 85 to 95% of its purchasing power. Because every year, inflation does not ask for permission. It just goes right in and eats up all your purchasing power. And here's the reason why some investors like us are turning into hard assets. Because multifamily investment or real estate produces cash flow. and appreciates over time, unlike the dollar has depreciated over time. The reverse is for hard assets like multifamily. Once you buy it, and you buy it right, and you operate it right, it appreciates over time. Same as single family. Once you buy it, it appreciates over time. But the difference between the single family and multifamily is that the multifamily will give you cash flow. That's it. Yes, sometimes single family can give you cash flow, but it's limited. But the cash flow I'm really talking about is the cash flow from the multifamily because it has multiple units. So if there is one unit that is empty, the other one will give you cash flow. Therefore, it's not limited like the single family. So let's go back to what we're talking about. Another one is people are switching into gold. Gold protects dollar or currency against devaluation. So some people are investing in that hard asset. And as I always encourage people, don't hold on to so much cash. Invest most of it into hard assets, something you can touch, feel, and hold. Some other people are also investing in businesses because they can generate income that grows with inflation. But for me, I invest in multifamily and also recently I started investing in gold. That is where you should start putting your money into. So hard assets do not just sit there. They literally work for you. They generate income for you. They hedge against inflation and they build generational wealth over time for you. So what should you do as an investor? Number one, am I saying that you don't need to keep dollar any longer in the bank? No, that's not what I'm saying. As an investor, this is what you should do. Keep some portion for emergency and for operations for you to run your life. Keep a little of that for yourself and invest the others into hard assets. Not just any investment, because there are literally many investments, but I am particular about the word hard assets, something you can feel, touch, and hold. Invest in those things. And also start thinking long term, because if you start thinking long term, you will start knowing why and start investing more in this type of assets because they grow over time and they protect your wealth. They do not devalue just like the way the dollar is devaluing. So the next time you notice that your grocery is half filled rather than full, all you need to know that it's not just the inflation that just started. Just know that it's the Nixon 1971 decision which removed the dollar from being backed by gold that started the journey of inflation. But we cannot disregard the fact that in the last 5 years, inflation have really gone up regardless. My question for you is, are you holding on to cash to just feel safe, or are you building wealth with hard assets? If you're looking at building wealth with hard assets, look no further. We got you. We recently closed on a 113 unit in the Dallas market and we just have limited spot. If you're looking at taking your money from the bank and start investing in hard assets like multifamily, this would be a right fit for you because this deal would literally double your investment in few years to come. If you need more details about it and how you can get started, all you need to do is to go to the description link. You go to the description section, you see a link there, click on it. From there, you'll be able to understand how this deal will fit right in for you to start saving your dollar from being devalued. So once again, my name is Bibi Ofiri and I teach people how to become financially free. I'll see you on my next episode. Thank you and have a wonderful day. Bye-bye.